Welcome to Blue Nile Tutorials. In today's session, we're diving into our sixth chapter, Income from Employment Other Benefits. Beyond salaries, many employees receive additional perks and benefits, but understanding how these are taxed is essential. We'll cover the tax treatment of various employment-related benefits, such as medical insurance, childcare vouchers, and staff discounts. You'll learn what counts as taxable benefits, how to calculate them, and the key exemptions to be aware of. Whether you're an employee trying to understand your payslip or an employer managing these perks, we're here to simplify it all. Let's get started. The calculations for some benefits like cars and accommodation are fairly lengthy and complex, but there are some other benefits which have specific calculation methods but are shorter to work through, and these are the ones we will consider here. Firstly, let's look at the situation where employers help with medical costs. There are two possible scenarios here. If the employer pays for membership of a medical insurance scheme for the employee, and sometimes members of the employee's family as well, this is a taxable benefit, but is calculated as simply the cost to the employer. Alternatively, it might be that the employer actually pays all or some of the cost of the employee receiving medical treatment to help them return to work quicker. If this is the case, provided the amount paid by the employer is less than £500, the payment is exempt and no benefit is charged. However, if the payment exceeds £500, the total cost to the employer is counted as a benefit, not just the excess over the £500 limit. Another common situation is where an employer allows an employee to make use of an asset owned by the employer, but for private purposes. With cars, vans, and living accommodation, there are special methods to calculate the benefit, but there are other assets which might be made available as well. If the asset is a bicycle loaned to employees to travel to and from work or for business purposes, this would be another example of an exempt benefit. For other assets, we use the use of method to calculate the benefit, which is 20% of the value of the asset when it is made available to this particular employee. This is another example of a benefit to which those general principles apply, so it would be time apportioned and we can deduct employee contributions made. However, in some cases the employer might then allow the employee to take ownership of the asset, possibly for a small payment or sometimes for free. This would require us to calculate a benefit for the gift of an asset. This benefit is calculated as the higher of the cost to the employer, less any use of benefits already taxed, less any employee contribution. Or alternatively, the market value of the asset when gifted to the employee, less any employee contribution. Let's look at an example of how this might work. Mike was provided with a plasma television for his personal use since the 6th of April 2016, when it cost £1,200. On the 6th of April 2018, his employer sold the television to Mike for £225 when the market value was £375. The first calculation would be the original cost of the asset, £1,200, less the use of the benefits charged already. So in 16-17, 20% of £1,200 being £240, and in 17-18, 20% of £1,200 being £240 again. Less the employee contribution of £225, giving £495. The second method would be to instead take the market value of the television when it's gifted to Mike of £375, but again deduct his contribution, the payment he's making, of £225. So this method would result in a figure of £150. The benefit to include in Mark's employment income is the higher of these two, so in this case, £495. For any other benefits provided by an employer where no specific calculation method exists, the cost to employer principle would be used. and both of the general principles of time apportioning and deducting employee contributions would apply.